I read this. The book was called Crash Proof: How to Profit from the Coming Economic Collapse. The problem is, I read it after the economic collapse. It was too late to profit from the economic collapse. Based on the title of his upcoming conference in Seattle, he's not turned into an optimist. His new book is called, or I guess this is the name of the talk he's giving, Too Big to Bail: Why the Next Financial Crisis Will Be Worse Than the Last. Peter will be giving a presentation and signing books also at McCaw Hall on April 13th from 6 to 9 p.m. All the information's at bobrivers.com. Peter Schiff. Are we going to have another crash, Peter?
Yeah, well, I guess the good news is you can still profit from it because a bigger one is coming.
So, all right. Now, economies and business are always cyclical, right? Is a crash like predicting something that's out of fashion will eventually be in fashion again? Or do you think we have the underpinnings of something really tragic and we're not hearing about it?
Well, we haven't, really solved the problems yet. It's all a function of the same bad monetary policy. I mean,
Right.
The fiscal and regulatory policy are part of the problem, but the biggest problem is the Fed and their manipulation of interest rates. They've kept interest rates too low for way too long. That didn't start with Ben Bernanke or Janet Yellen. I mean, Greenspan kept interest rates much too low for most of his tenure.
All right. So tell the average lay person, if you would, why that's a bad thing. See, I think low interest rates encourage people to continue, to do business, and it keeps things chugging along. And when they raise them, people will have to be more careful. And we don't want people to be more careful, do we?
Well, being careful is a good thing. We don't want people to just recklessly take risks. But, it takes two to tango. And a lot of people think, yes, I want low rates because it makes it cheaper to borrow. But it also means that if you're saving money, that you're not going to get as high a return on your savings. And so if people aren't going to get compensated for savings, they won't save. And that is one of the biggest problems we have in the United States is people aren't saving enough money. And saving is where economic growth comes from. Because in order to build a factory, you need capital. And capital comes from underconsumption and savings. And we don't get that when the government keeps interest rates too low. And so the government is distorting the economy. It is leading to booms and busts, bubbles, malinvestment of assets. Prices need to be determined by the market, not by government bureaucrats. Interest rates are no different. The price of money needs to be set by the market, not by politicians with printing presses.
All right. Now, Spike's shaking his head a little, and I'm curious as to why. Spike, what do you think?
I've always heard the economic theory that you have to stimulate an economy, and commerce is what drives an economy. Is that not a true thing?
Yeah. What do you say to that?
No. I mean, look, everybody wants to buy stuff. I mean, you can't grow an economy by stimulating demand. The demand is already there. What has to happen is production. Supply is the constraining factor. You need to be able to produce more stuff. And the government can't create production, by printing money or spending money. That has to come from capital investment. That has to come from innovation. None of this comes from government. None of it can be stimulated. It can only be stifled. So if the government really wants true economic growth, they have to get out of the way. They have to keep taxes and regulations as low as possible, which means the government has to spend as little as possible. And we have to have a market rate of interest. We have to have interest rates that reflect the true supply and demand. And in America, since we have so little savings, interest rates need to be much, much higher.
Right.
The problem is letting them get to where they have to be means that a lot of bad things are going to happen in the short run.
Right. That would choke things, but that would be good for your book. This crisis will be worse than the last. I mean, it'll be good.
It'll be good for the economy. It'll be good for America.
In the long, but we're also talking about short, medium, and long-term good, right? You're saying in the long run this is not good, which is kind of the ages-old argument that we kick the can down the road. Joe, you have a question?
Well, I agree with you, Peter. The frustration of these interest rates when you want to save money. My savings account gets me less than 1%, and they tell me that's actually pretty good, which frustrates me. So I start to look for places to put what little extra money I have, and my most recent investment was Radio Shack stock. Do you got a better place I could maybe be putting my money?
You guys were talking before I came on the air. You were talking about the real estate market. The government always pretends that, low interest rates are good for home buyers because it makes it easier to buy a house. Well, if the government let interest rates go up, real estate prices would plunge. that would make it a lot easier for people to buy a house.
There you go.
Right.
Yeah.
Or lose your
If housing
savings.
prices were allowed to come down, the government is artificially propping them up. So if housing prices were able to come down, then more people could afford to buy. The reason they're so expensive is because the government props them up with low interest rates and guaranteed mortgages. So, yeah, you can buy a house, but now you have a mountain of debt.
But yeah, I didn't say anything about a house. I own a house. I've got extra money. I want to know where I can make a little on it. I'm getting less than 1% from my savings.
What would you invest in?
Where would you put your money?
You should come down to my seminar in Seattle. I'm going to be talking about it. But what you can buy precious metals. You can invest abroad. You can invest in foreign stocks that pay good dividends. The key is going to be to get out of the U.S. dollar because, unfortunately, the efforts to keep interest rates artificially suppressed, to keep these asset bubbles inflated, and to keep broke Americans spending is going to cause the dollar to implode. And so the value of our money is going to decline dramatically. And so if you have dollars, they're not going to buy very much in the future. So the key is to convert them into something now that will retain its purchasing power later. And I think,
which country?
around the world
Which country do you like to do better than the dollar? By the way, you've been down on the dollar for a long time. I remember reading that many years ago. Many. I don't know, 4, 5, 7, whatever it was. And I thought there'd be a huge dollar collapse after our financial collapse. Instead, everybody took shelter in our dollar.
Yeah, that's how crazy it was. The dollar was at record lows leading up to the financial crisis. It had been falling for decades, and then it rallied, but then it went down and made new lows again. I mean, the dollar has been on a downward path ever since we went off the gold standard in 1971, and I think the trajectory is going to accelerate. So I think the dollar is going to start to lose value even quicker as this, false perception of safety fades. I mean, people believe the U.S. economy is much stronger than it really is, and so there's confidence that's unwarranted in the dollar. But, before the bottom drops out of it, you do want to get out. And, the countries that you said, what countries do I like? I mean, there are a number of countries. We invest in places like Singapore, Hong Kong, New Zealand, Australia.
New Zealand and Australia came to mind. What about Canada? Their dollar, man, I remember we used to be their dollar used to be 50% lower than ours, and now it's about the same or a penny or two better.
Yeah, well, it's down to about 91, 92 cents, but it did get as high as about $1.14.
It did, okay.
I think the trend in the Canadian dollar is up, so it's one of the currencies that we own. But I think, again, that the Canadian dollar sold off last year along with the Australian dollar and some other commodity-type currencies on this false narrative of an improving U.S. economy. See, I think the U.S. economy is heading back into recession.
You do? Okay.
Economic data of the first quarter has nothing to do with the weather. It's not the weather. It's the economy. The stimulus is wearing off, and
now,
the hangover is setting in.
They say the hardest thing, it's really easy to know, even Greenspan used to talk about irrational exuberance, and remember, who's one of the smartest investors in the world? The guy Buffett is really like, I don't understand why these things, during the internet bubble. It isn't the hardest thing to predict. Everybody can say, well, there's a bubble or it's going to crash, but no one can say when. Sometimes it'll go on fluffing up that souffle for 5-10 years, and you may lose out if you get out. How do you know the time?
Yeah, I mean, there is no way to tell how big a bubble will get before it pops.
That's the thing about bubbles.
It's relatively easy to identify a bubble.
Yeah.
But yes, timing when it will burst is harder, but you don't really have to time it.
But if you can sit on top of a bubble,
recognize it and invest accordingly.
If you can sit on top of a bubble till just before it pops and then have a Mary Poppins parachute, isn't that the best?
Well, yeah, but a lot of people that try to do that end up, going. They don't have that parachute.
No.
They mistime it, and they end up losing not only their gains, but a lot of the principal they started with. And that happened during the dot-com bubble. That happened during the housing bubble. A lot of people made the round trip and ended up worse off than before they began. So, it's possible if you can time it perfectly.
Right.
But most people won't time it perfectly. Most people will buy near the top and get out near the bottom. So I think the best you can usually do is recognize a bubble and just don't invest in bubbles. Keep your perspective and buy value. Buy what everybody is ignoring to invest in bubbles. Oftentimes when you do have bubbles, there's lots of pockets of value in other areas because people are selling certain assets to participate in the bubble.
And then you can buy bubble cleanup stuff. Like someone's always profiting. All right, the book Crash Proof: How to Profit from the Economic Collapse.
My newest book is The Real Crash.
The Real Crash. All right. Peter, I've enjoyed...
How to save yourself and your country.
All right. I've enjoyed reading your books. I always wonder about the timing of the stuff. Go see Peter, folks. He's going to be